All right, gives me great pleasure to now have on board Mr. Raamdeo Agrawal. We are talking to him on the day it's Warren Buffett's birthday. Berkshire Hathaway, chairman of Berkshire Hathaway is Mr. Warren Buffett. The market cap has reached $1 trillion. I have the perfect man in my studio who would like to talk about the man who's known as the Oracle of Omaha. So the new ad campaign, lovely ad campaign. I've seen you in the ad also.
Yes, we have tried to put a little salt on the research. Nobody was said, sir, if you want to have some credibility about the research-based campaign, you come.
You know, I must share with you that I was at an event couple of months ago, and it was the SEBI chairperson, Mrs. Bhuj. She, in fact, on a public forum, I'm saying what was there in the public forum, she said that, look, I'll give you an example that in terms of equity recall, Motilal Oswal is a great brand. It was not a passing remark, it was, I think, an endorsement of the fact that how Motilal Oswal has really managed to become a house based on solid research.
Our marketing guys have done good job.
No, but it's the substance which matters. I mean, over the years we've interacted with you. It's
I'm of the firm belief that to understand value, see, there is a price and value. Buffett's first quote is, what you pay
price is what you pay,
value is what you pay, value is what you get.
Okay.
So understanding difference between price and value, and unless you do research, you can't understand value. Price everybody knows. There is no advantage in knowing price. There is only advantage is if at all you know the value. And underlying values, what happens is when you actually hit on the value, you are way ahead of the crowd. And then you are looking for confirmation. Am I doing right in buying? Because nobody else knows the value, the kind of deep value you can see. So I think knowing the difference between price and value, and value you can know only if you do research. And unfortunately right now market is exploding in terms of size, in terms of depth, in terms of participation. There are so many innocent people, they need a lot of research, a lot of advisory. In fact, they are the people who are coming first time. It's like people coming in the swimming pool for the first time. They need a lot of hand holding. So I think that's why we have decided to double down on research, and we will, you see in next 1-2 years, the expansion of research at Motilal Oswal.
We're talking to you when Warren Buffett is celebrating his birthday. What a coincidence. And
yes,
his market,
it's just a coincidence. I mean, I was very keen to, when I was really waiting $1 trillion market cap for him, and it came as a birthday gift to him. And to him, billions also don't matter. So now at $1 trillion, and if you see the compounding, he was $1 lakh in 1962. Just $1 lakh, I think 1,12,000 or something was his net worth in 62. And today he is actually 140 billion because he owns 40% of this $1 trillion machine. But actually 50% or a little more than that, he has already donated. So if you give, if you add up, I think from some day after he's taken over, I think he has done compounded about 20%. So, but if you take donation part also, then it's more like 25% or something like that. So it's not easy and quick money. It's at a pace, and it's a very well planned. In 63, in his letter, he said, I want to make 10% higher than what the S&P does. S&P did 10% in last 60-65 years, and he did 10 plus 10, that is 20%. So that's the power of goal setting and the journey which he has done in last 65-70 years. Of course, he's born in 1930, but his actually active thing started in 56 when he started managing Buffett partnerships. And in, I think, 68, 69, he closed that. And in 66, he had started buying Berkshire at about $7.50 per piece, which is now $6.5 lakh per piece.
And there's a baby share, and then there is a Berkshire share.
Then those are the derivatives, but the main A class is about 650,000. So, it's a million times.
Okay. My question is that while $1 trillion for Berkshire Hathaway, I think it's a fantastic achievement. To put a number to a context, to put a number for our viewers.
And it's still counting.
It is still counting.
Still 94. If he lives 104 or 110, he should live maybe 1,000 years. But even if he's another 10, 15 years, see, every 5 years will double his net worth. So in next 5 years, it will be $1 trillion will go to 2 trillion, and next 5 will go from 2 to 4 trillion. So I don't know, we'll end up as a $10 trillion or $20 trillion guy.
But Berkshire Hathaway as a stock in last 10 years cannot be called as the rank outperformer stock.
doesn't matter. See, on this base, even if you make 10%, 12%, market has done say 15%. Like current year, market has done say maybe 20% or 18% in US. He's done 28%. So market has a sense of, market has its own way of rewarding. That is inner scorecard and outer scorecard. So outer scorecard is what market does. Inner scorecard is what he himself is doing. So he himself is doing very well. Someday market will realize what he is doing. And hence in 1 year, you might see doubling or something like that.
Do you think the story of Berkshire Hathaway is very different largely because they are in the insurance business? That's how it started getting a lot of float. In India, that is not there. In India, you don't have that advantage what the US, what the US corporate sector gives you. So Warren Buffett was at the right time at the right place, right investments, but a lot of money which came was purely because of the business he was in.
Yeah, so I mean, but to follow his model, because he was an investor. See, frankly, he was an investor, and he didn't want to do. I mean, he tried to take over the Berkshire Hathaway, which is a textile company. Obviously, that was a mistake. He admitted that it was a mistake. So in next 15 years or 20 years, he somehow he closed last of the mill in sometime in 1985. So basically, he's not an operating guy. Then he stumbled upon this insurance thing, where he learned on one of the Saturdays, and he learned this entire thing with Geico. And he started, I mean, seriously getting into insurance. And he allocated a lot of money into insurance. But it is all about insurance, that float money, how he started investing. So it is his insurance business, of course, but that was with the float. So how he invested the float business into, say, American Express, Coca-Cola, and all sorts of things he did. That's, I mean, it's a combination of operating and investing. It was not only either about the operating or about, in India, you have all the operating businesses. And anybody can take up this particular kind of thing if he is passionate about operating as well as investing. They are very rarely you find this kind of a double track guys, who can operate a business and who can also invest.
So Buffett of late invested in Japan.
Yes.
Before that, he's been investing in China. He has invested across geographies actually.
Not much actually.
China,
predominantly
Japan,
is America.
US.
I mean, I would say 90% plus. It is, even today, if you see that Japanese allocation, I don't think it will be anywhere close to even 10% of his net worth. Now, net worth itself is like 650, 700 billion. In that, I don't think it will be more than 50.
He's never come to India, even though we say India is a good market.
He came, but he never invested in it.
Exactly. I mean, he's visited India once. I distinctly remember covering that also in Bangalore. We'd gone. It was a lovely visit.
Yes.
And he's never invested in India.
Yes.
That is something which I would always say is that is a regret. Maybe he's going through, or maybe a question which I would like to ask him that, why have you avoided India?
No, he invested in Indians rather than India. He's got Ajit on the side, which is he thinks that is his biggest find in Berkshire Hathaway. And I think
his fund managers, by the way, invested in Paytm at some point in time.
Yes.
But that was not an investment coming from Buffett. That was coming from, I think, Todd or Ted, one of his fund managers.
But I think the amount of money Ajit has made for him, I mean, is stunning. I mean, any country would have not been able to make as much as an Indian. Ajit has made it for him. So that was his India Connect, I would say. But not as far as, I think, size of the companies are small. The ownership patterns are a little stringent in the sense that you cannot say insurance. He wanted to come in, Bajaj Alliance, they want to do it, but you couldn't have been allowed 51%. They said if we build the business, we need to have 51%. So now I think amendments have happened where they can own. So, but I don't know whether they want to come at all here. So. But India exposure has been very limited.
One number we always look at is that how much cash is he sitting on. In fact, the cash has only gone up multifold after his selling of Apple. So if you look at Buffett, and if Buffett is sitting on cash, is that an indication of how he feels about the market, or we should not confuse ourselves?
No, we should not. See, first thing is, we should not bother about, first thing is macro calls are terrible. He himself says, and I have seen it personally, in 2008, when the GFC happened, on the eve of it, we go every year. So when we went there, he said, no, there is good amount of employment is there, and all the new houses or whatever is there will be absorbed and things will be taken care of. And this was May. By September, the whole world collapsed. So his macro calls have not been too great. You know, and so don't bother too much about what he thinks about the market. You must go as per what is your feeling about the market. He's sitting on almost 1/3 of the balance sheet as a cash. So, so what is his call? I mean, obviously he wants to book money, profit out of Apple. That is very clear. But I mean, where he wants to take the pile of cash, to which new suddenly you'll find somewhere all in, you know, say some huge company like Coke or something, which he loves. He might just gobble it up or something like that. So I would not read too much into the cash he's holding.
Since you look to Buffett to understand the worldview, how to invest, the fact that Berkshire Hathaway did not shop a lot in 2020 when COVID crisis happened, they shopped a lot in 2008 when they invested in Goldman Sachs and others. Does that influence your thought process when you're investing in India, that pile of cash?
No, Nico, even before I heard about him, from 85 onwards, I mean, I met him I heard about him in 94. But right from 85, I've been very voracious buyer of shares. I don't know what is in my head, but I always thought that stocks are better than cash. So I have been a very continuous buyer of, I never had cash even a percentage before I heard about him. In fact, I'm a bit surprised that he's kind of timing the market. He's not getting in, he's sitting with 33% cash. So obviously he's trying to say that the soft message is that maybe market is going to collapse or something like that in US.
And the money is in US yields, which are 3.5 to 4%.
Yeah, so that's at least good that he's getting 3.5% now. But but I never timed the market. I learned a lot from him about not timing the market. It is a time in the market which is more important. But I think maybe we are doing a lot of businesses which are client facing. So it is better that we stay from the active market, though my entire investment is the market. So, but I never timed the market. I never tried to go in cash. And I mean, even if you go, by chance you are right to be in cash. Say today, if I say market is going to go down by 20%, and hence I'm in cash, then you have to get right that once the market goes down by 20%, then you have to be right again it goes up. You can't get, you're not God. I mean, even God will not get all the calls right. So why bother about it? So stay put and, I mean, of course, keep churning the portfolio. If something has gone too much high and you want to change that company and buy something else, that you keep doing. That my managers are in any case doing.
Now, in the past, you've managed private money, your own money, you managed client money. Buffett decided not to manage public money. I think
that was very big decision.
Very big decision.
Career, yeah.
If given an option just to manage private money, your own personal money, would you have managed it differently in terms of, not the stocks, but in terms of concentration? And let me just finish my question. For example, Buffett's largest holding, Apple, accounted for nearly 40% of its portfolio at some point in time. If Raamdeo Agrawal today was managing only the prop money or family money or personal money, do you think allocations would have changed for him? Not the stocks, but allocations.
No, allocation would have been, see, I would have been far more buy and hold.
Okay.
You know, and because taxation is also high, I would have had maybe concentrated portfolio of 15, 17 stocks or something like that, or maybe 20 stocks. So that would have been the case if I had managed. In fact, till I was managing, that's how we were, and that's how the concept of focused portfolios also
Focus 30 came through.
Focus 30, Focus 25, Focus 35. So that's how even the right now ethos of Motilal Oswal Asset Management is like that we manage very focused portfolio, not more than 20, 25, 30 stocks in all the portfolios.
You know, one of the favorite quotes of Buffett is rule number 1, don't lose money. Rule number 1. Rule number 2, never forget rule number 1. That quote will just bring up on your screen, and I just want to discuss this one. Easier said than done. Don't lose money in the stock market. I mean, it's very nice not to lose money in the stock market, but reality is very different. What is Buffett trying to say this again?
He's saying that have your purchase price so attractive, I mean, at the time of purchase that you know so much about the business, you be ahead of the crowd and have your purchase price so attractive. Even if there is a mediocre sale, see, one is that you'll have a good sale. I mean, the stock will do very well. Second is that stock doesn't do well and you may have to kind of clean it up. Even with a mediocre sale, you should not lose money. So, that has to happen at the time of purchase itself, that your intense research, your knowledge of the company, knowledge of the business, knowledge of the management, and that knowledge of business and management will give you knowledge of value, underlying value of the company. And once the value of the company and the price, there is a gap, then only you strike.
But for that, should one wait for crisis, 2008?
No, crisis, it's not about the crisis. It's about a particular stock. Even in good time, you can get a lot of stocks, which you can buy at reasonable price. It's not that all the time, all the stocks are fully priced. No. I mean, right now, if you see some sectors like, say, capital goods, even say digital companies, they're running the market right now. But there are a whole lot of sectors, like whether it is consumer, whether it is private banks, whether it is a whole lot of these companies are not that much flying. So you'll find your nuggets out there. But you got to know that particular business and the management and the underlying value. And what as I said in the beginning, when you find the value away from the price, significant value lower than price, you typically find that nobody wants to be around that. It's kind of unpopular or not popular. So let's say not popular. You have to bring your conviction on the table and buy.
When you identify an opportunity, would you say that anybody who says that, okay, this is the stock I want to invest in, put at least 5% of your capital allocation, because that's the trick of making big gains? 5%
is a good way to start. And if it is very large stock, then even, your allocation should be 5% to bring some conviction on the table.
Are there stocks which you owned in the past where the single weightages have gone beyond 15-20%?
Yeah, 20-22%, not as an allocation, but in 2000, on 31st December 2000, my holding in Infosys was 40% of the portfolio.
40%?
40%. I started 2.5%. It went 10x, 20x.
But this was not public money. This was private money.
No, I'm talking about private money at that time. So I'm pretty comfortable. I don't start with 40%. But if it grows, I'm pretty happy. Let it become. I don't count whether it is 20%, 30%, 40%. Yeah.
You know, from last 2 years, there is one constant debate in the market that India is great, but valuations are expensive. Most of the good quality companies are trading above their fair value. This is a constant argument I've heard in all the bull markets. But as an investor, I've seen that once you identify it, you don't care about what the P is 30 or 40. You just let it ride. So when is the decision to sell? See, buying is becoming very easy, digital hai, go on the website of Motilal Oswal, open a demat account, go on your app, buy it. But when to sell, I think is the most important thing, a trick which you've, in a sense, expertise now.
No, I have not met many guys who are very good in selling, but I think you keep churning your portfolio as much as you want to, in the sense that if one, because in this kind of market, you also get a lot of ideas, in the sense that every company is willing to talk to you, a lot of presentations are there. So, and a lot is happening in the corporate world. So you definitely come across new ideas. So if you come across one new idea and you have slots are full, 15, you have to find something which you have to throw out. So you sell something and buy something, and your 15 remains 15. So there has to be a way to figure out, and it cannot happen that if you have 15 stock, all 15 are just flying and you are very happy and everything has worked out perfect. It just cannot happen. You'll always find that man proposes, God disposes. You look at a company and you think that this is just going to go rocket, and in 6 months' time you realize that, boss, the story is different than what he thought.
So Buffett also says that we believe in owning permanent, we believe in being permanent owner of equities, or permanent owner of that businesses. Is it easier said than done, at least when it comes to Indian context?
No, it is same. It is same. The issue is, what is the type of capital you have? If your capital is patient capital, it is your own net worth. Who cares whether you have 1 stock, 2 stock, 3 stock? It is 50% in one stock, another 40% in second stock, and some 20-30 stocks in the rest of the 10%. Anything is possible. The issue is that a patient capital? Are you answerable to the people at large? Like Buffett, the way Buffett runs, Berkshire, there's no company in India which runs like that. Or we don't have, now you see a lot of these kind of companies coming in, who will assert, who will say that, okay, boss, I'm running a, say, broking business or some business, but I'll manage very actively my equity accounts, because here there are so many companies which are more than 50, 60, 70% owned by the promoters. In fact, we are at Motilal Oswal, we are trying to do that. We have a very large operating business, but our mark to market from the treasury side is almost matching now. So the double engine compounding machine, we have tried to design in India, in Indian context, and it is very doable.
So the cash flows are coming from the cash flows are coming from your broking business, from AMC business.
All the
AMC business has turned profitable now.
No, it was always profitable.
Initially, I think it
never.
was.
We never made losses.
We never made losses.
We never made losses.
So that cash flow comes in.
Yes.
And that cash flow is adding to the profitability, and then there's treasury income which comes from the prop investment.
See, there is an operating capital in the balance sheet. There's an operating capital of 30%, and 70% is a treasury, which is a whole lot of equities. Now 30% earns about say 50% on that. So 30% is say 3,000 crores. On that we'll earn about 1,500, 1,600 or maybe 2,000 crores free cash flow from operations. Of that, 30% will pay by way of dividend. So that 500 crores will go by dividend. 1,500 crores will go back to the treasury. And treasury itself is growing at 20%. So 7,000 crores will earn 20%. That will give me about another 1,400 crores. So 1,400 crores from operating, 1,400 crores from. So combined will be about 3,000 crores profit, like that. So now this engine will keep building, but it takes time. Overnight, nothing can happen.
I have had the pleasure and honor of tracking Motilal Oswal before it went public also, and I remember there was initially went in public, the quarterly profit was not in 3-digit, it was actually in 2-digit, and now it's in 4-digit.
Yes.
So I'm sure there was
just only one quarter. Last quarter only was 4-digit.
Yeah. So last quarter was 1,000 crores. I remember we had this conversation. So from single digit to double digit to triple digit to 4-digit.
Yes.
Hopefully 5-digit coming very soon.
Not very soon. See, 5-digit means, again, you're talking about, say, from 10,000 crores profit. So that is 2,500 crores per quarter. So 10,000 is like 4x of the last year's profit. It will take time. 4x will take about, say, 5 years, 5-6 years. It should happen. It should happen in 5 to 6 years' time at the rate of 25% compounded. It should happen.
So again, I go back to, we are discussing Buffett and, we are celebrating his birthday, understanding his investment philosophies. Buffett has given a template to the world. Buy a good business run by a decent manager and buy it at a fair price. If I look at in India, this template, even though everybody acknowledges it, but let's say Raamdeo Agrawal's portfolio versus Rakesh Jhunwala's portfolio versus Nimish Shah's portfolio versus Prashant Jain's portfolio, I'm talking about the big investors here, all of them endorse this philosophy. But the selection of stocks is nothing in common.
Of course, there's so many good companies, so everybody approaches a good stock portfolio. So if there are 100 good stocks, some 20-25 will go to Rakesh, another 25 will go to Nimesh Bhai, another some 15-20 will come to me, or like that. It will get distributed. Some overlap is always there. So that's how because what is good is in your eyes. I mean, I may not know what Rakesh is thinking as a good stock. I may not agree. He will discuss with me everything. And yet I may not be able to get aligned the kind of research he has done, because the research he has done, I have not done. So context is very different. So, and many times you fundamentally differ with the thought process of the guy. Because how he is able to see the future. See, you have to be ahead of the curve. Basically, a successful investor, whether it is Buffett, whether it is Rakesh Jhunwala, these guys, they have, one of the things is that they're way ahead of the crowd. Way ahead of the crowd. They can see how the company will shape up in future. In most of the places, sometimes it doesn't work out.
How do you get that? How do you say that, okay, I can see 3 years forward?
Pardon?
How do you see that? I mean, I've seen Rakesh Jhunwala closing deals in a matter of 15 minutes.
Yeah, so he must be having something in his mind, looking at the guy or looking at the industry in which he's operating, or he would be, or maybe the entrepreneur himself is telling what he can do in next 10 years, and he believes in that. So, which people in market, they may not believe. So, to be able to think ahead of time and how big, see, one of the things is that how big the country itself will be. See, knowing compounding, that's where it helps. So, like if we started when India was about $250 billion in 92. Today it is 4 trillion. Now the game in next, say 10 years, it will be from 4 to say 8 to or 10 trillion. Now this journey is very different from 92 to say 2000, when it went from say 250 to 500 billion. So, that the percentage growth is same, but the impact is very different. When you go from 4 to 10, the world will watch. You will order 1,000 planes in a year. In 92 to 2000, you barely order any plane. So that's a different kind of, different amount of money you're talking. This compounding at times is confusing. That 7% on a different base
Yeah.
is a different impact.
Yeah.
You know, 1 to 10 is also 10x, and 10 to 100 is also 10x, and 100 to 1000 is also 10x. But the impact, because basically country and population is same.
HDFC Bank, 20% compounding first 10 years, 10x. The same compounding continues for 20 years, it becomes 100x.
100x.
We pretty much know that.
Yes.
So I've not had a pleasure to ever visit Berkshire Hathaway's headquarters.
Come this year.
His office I've not been to. But Munish Babra has been there. And he was telling me that, look, it's office which has only 12, 13 members or staff. Buffett goes in his room, he drives to his office, and he's got big stacks of books which he reads. Sometimes he refers to the Moody's books, sometimes he refers to some reading material, which means he reads a lot.
Of course.
Is that the differentiating factor?
Of course.
How much do you read? What all do you read?
I cannot match up with him, but I do read about a book in a month.
A book in a month?
Yeah, and if I find a book really interesting, maybe
Which is the
10,
book you're
15
holding
days. I mean, this is an old book. I mean, see, but I don't give my book to anybody.
Okay.
It just gets stuck in my, because I mark it. So, and mark book is very important, because say today I'm coming, so I would like to see through some quotes and all. So these books are very helpful in terms of seeing what really hit me when I read at that point of time. Should be insightful even today types, you know. So, so it is very important that book is the biggest friend. I mean, you're flying or you're alone or something, and you're in an office, you don't have appointments for 5 hours.
I think the number for Mangar was about 100 books a year or something.
They're
Maybe more.
In fact, they're professional readers. You know?
No, Bill Gates, it amazes me every time I look at his reading list.
Yes.
He's got books which are thick and fast. I've ordered some of those books and I said, "Arey yaar, ek saal mein itna kaise pad sakte ho?" Because that is a recommended list. And I'm sure he must have browsed another 30-40 books more before he recommends them.
Yeah, the reading is a key. In fact, I'm interviewing a lot of kids right now. And I find that, I mean, the CA rankers also, they don't read. I mean, they're very good in their academics, but they don't read additional. So I said, now CA is over. How do you compete now? The differentiator is the guy who's read even 15 books, and you have not read any other additional book. That guy will be smarter in the interview. So I think the younger kids who have ambition to make it big, they must start reading. Read a fiction, read whatever, but start reading. Because once you start, you feel so nice when you finish a book. I just finished a book of Mr. Nayak's
His autobiography just
autobiography by Nijat Kumar.
Mr. M. Nayak.
M. Nayak. Wonderful book. I mean, and you go right till last page, you know, and page read by what he has done in giving, you know, apart from building L&T. So that is very important to, and now I had met Mr. Nayak twice, thrice, and in his office also he has been very nice to give time. But reading the book, you know, you get so much of detail about a person that L&T is him and he's L&T types, you know.
Yeah.
I mean, he's literally a reincarnation of L&T.
He's built an institution. He's built an institution.
He built an institution and he gave in. Like, and he was committed to joining L&T only somehow. So, you know, the kind of, I mean, he had the vision to, as an engineer from Gujarat, to really get into the L&T and build it, and like an owner, though he was not an owner, he built it like.
And L&T is IT companies also. Who would have thought that a company which was in engineering and cement will move into IT? Very
impressive. So, but then if you don't read, I mean, TCS factory by this one, TCS.
I've not read this one.
Huh?
I'm not
Raamdeo book.
I've not read this one.
Yeah, TCS factory. It's stunning. I mean, that not only talks about how TCS is built right from 70s, and what is the ethos at Tata's and how much delegation they have, and how Mr. Raamdeo kept on doing against all the adversity of Forex and everything.
If a book is there on Motilal Oswal, how do you think the book would start? How do you think the book would end?
You know, how we, I mean, now maybe after 10, 15 years we'll say how we created the compounding machine, you know.
So the best for Motilal Oswal is yet to come.
Of course. We did. I mean, 37 years it took to 10,000 crores. I mean, now it will take like every 3 years it will keep.
And you're confident in the new generation because your son, Motilalji's son, they both have come into the business now.
Of course.
So in terms of the
that gives a clear longevity to the entire compounding machine. They understand compounding very well.
But can they do what Motilalji and Raamdeo have done both?
Pardon?
Can they do what their fathers have done? Do they have that thought process long term?
See, they'll be different. They'll be much more digital.
Okay.
They'll be much more digital.
Not approach, a thought process.
Yeah, I mean, once they're actually put into saddle. Right now they're kind of getting training, but at some point of time they'll be put into saddle in next 2-3 years and start actually managing things. They are managing things. They are business chiefs. They are running, but they have a lot of support right now. But at some point of time, they will become leaders of their own businesses.
You know, when I look at Motilal Oswal Financial Services, it's just amazing that two partners who've really demarcated their own areas. You work together, you take joint decisions together. You know, two brothers find it difficult to survive beyond a time in today's time. Here are two partners, and you met by choice.
Yes.
You met at the CA hostel. CA hostel. So friends made in a CA hostel, and that friendship has translated into, you know, what a wonderful partnership. So I'm saving perhaps the best for the last, and this is something which I read in one of the newsletters of Waren Buffett. And he says that there are 3 things you must avoid if you want to be happy and successful in life. The first is ladies. The second is liquor. And the third is leverage. We'll keep the first 2 aside, ladies and liquor. I'll focus on the leverage part.
Yeah.
Rakesh Jhunwala used to say that, look, I have made capital because I had no capital because I have leverage. Buffett has always been a deep proponent of don't use leverage. We all know the examples, what happened to his third partner. Leverage works in a bull market, it kills you in a crash. What is your view on leverage? For somebody who's starting fresh, does not have appetite or
even before that, against leverage, my dad was. I mean, he's a farmer, simple man. He never thought of jitna hai, kam kamao, kam khao. That was his ethos. But he was completely against this thing, and that got ingrained in me, because in stock market, as a chartered accountant, or when I entered in, I saw around and I saw that people are falling by wayside. A lot of people, they shut the shop and all. It was only because of the speculation. So first thing is, don't do speculation. Second is, speculation also brings leverage, directly and indirectly. So one is, I mean, in speculation, people get stuck only because of too much of leverage, inherently too much of leverage. So speculation and leverage, they go hand in hand, and both you avoid. And particularly in Indian market, even God cannot sink you, I'm telling you.
Then why are you giving this service? Why is Motilal Oswal brokerage offering service of F&O and leverage?
No, that's a business itself. F&O is we are saving platform, but you'll see everywhere we keep saying avoid speculation, don't do speculation. There is so much of money in investing. There is no quick money in the market. One of the biggest thing about Buffett is that people are thinking there is a quick and easy money. There is no quick and easy money in the market. There is a very patient money, and there is a tons of it. There is so much of money. मैं बोलता हूँ गंगा में जितना पानी नहीं उतना पैसा है. But it is not quick money. It is a very patient money. If you want to make your 1 crore to 10 crores in 10 years, it is very possible. But if you want to make 1 crore to 2 crores in next 1 year, very tough. In fact, you might lose your 1 crore.
So I'll wrap it up with one final question. Like an advice, everybody looks up to you for nuggets of wisdom. Let me explain the market to you right now for the benefit of our viewers. We had 5 crore demat accounts before COVID. Now the number stands at 11. The SIP investors have gone higher. So why are we seeing both of them going together? One is demat, which is largely F&O,
broking side is the demat.
Broking side, and then this is long term.
Yeah.
They both are coming together.
Yes.
What does that mean?
That means that both type of guys are coming. Investors are also coming, and the patient investors are coming, because SIP is the best way for a new and not ignorant, I would say, but lack of knowledge people.
Passive wealth creation.
Yeah, so that will be passive, but they will make far more money than active and smart guys on the market. Because they will not bother, they will be buy and hold. They will just leave it on the God or whatever. And, it is very aptly said in the US, in fidelity research, who did the best in fidelity?
Yes.
The guys who are dead.
Yes. I've heard
So
about this.
activity in the portfolio is not the friend of wealth creation.
It's like Newton's third law. Every action will have opposite reaction.
Yeah.
The more active you are, the more money you will lose.
Buffett gave for his reasons of success. Which are the 2-3 reasons for his success? He said compounding, and second is the growth in the US economy.
Yeah. Ovarian lottery, as he calls
ovarian lottery. So both combined. See, US growth is ovarian lottery, but compounding is his own doing. And compounding you can do only if you understand compounding. The problem is the world doesn't understand compounding. Everybody heard about it, but nobody can do compounding, because compounding allows you to merge the present with the future.
Yeah. Compounding allows you to merge the present with the future. Certainly.
Yeah, that marriage between
brilliant.
where you stand and where you want to go, that merging and the bridge is created with the help of compounding. Rest all you have to walk the bridge.
Fantastic. Okay, so we started the show. Warren Buffett's had, birthday. You want to say happy birthday to him? Hopefully, we'll try and take this message across to his office. So you want to say happy birthday to Mr. Buffett, and then we'll wrap the show.
Yeah. Very, very happy birthday to my guru, my teacher, Mr. Waren Buffett.
Thank you very much. And with that, it's back to the studio.
If you like this video, then like, share and subscribe to ET Now.